Hi everyone, Mathis Connor here with Connor Management Group, and this week we're going to look at the best stock to buy in the services sector. Today is Thursday, February 6, 2014. Taking a look at this opening slide, you see that the industry for the company is electronic stores, and the 12-month upside potential we see as 51.8%. We see quite a bit of run-up opportunity over the next year. Going on to the second slide, we see that the name of the company is called Conn's Incorporated. The ticker symbol is CONN. The industry is electronic stores, and as mentioned, we see the upside at 51.8%. Conn's is engaged in the specialty retail of durable consumer goods in the United States. The company's stores offers home appliances, which includes refrigerators, freezers, washers, dryers, dishwashers, rangers, air conditioners, furniture and mattresses, etc. Their website is www.conns, that's CONNS.com. The company is headquartered in the Woodlands, Texas. That's just north of Houston. The company was founded back in 1890. It was under different names, but this company has quite a bit of history. The number of employees stands at 2,700. Their ticker symbol is CONN, and they operate in the services sector. The annual revenue for Conn's over the last 12 months was $1.08 billion. The net income was $83 million. And here's something that's different. Their cash from operations was negative $148 million. We haven't really seen that in the previous companies we looked at, but there's a good reason for it. Basically, the cash from operations was adjusted because of changes that they were experiencing in working capital related to some delinquencies and customers they were extending credit to. But as we'll get into it, they've gone through a turnaround. The market capitalization for Conn's is now at $2.04 billion. Going on to the products and services page, here on the products and services page, you see the Conn's logo in the upper left. We've got another circle, three intersecting circles that kind of highlights Conn's strategy, retail being one, credit, extending credit to their customers another, and service, delivering their products quickly with their own line of trucks. The Conn's, we also have an excerpt here from one of their presentations. Conn's presents a differentiated retail strategy. They have extensive selection of high dollar value, high margin merchandise, affordable credit to qualifying subprime customers, trained and commissioned sales associates, and next day delivery, installation, and service. They're a leading specialty of retail branded consumer home durables. They're located in over 70 stores in Texas, Louisiana, Arizona, Oklahoma, and New Mexico. So, I'm here in Houston. I see Conn's stores around pretty regularly, but if you're in different parts of the country, you likely never heard of them before. And once again, their main products, we have another picture showing them their main product lines. We've got electronics, furniture, computers, appliances, and mattresses. So that's what we have for that page. Oh, and also a picture of one of their storefronts. On to their financial metrics. Once again, the annual revenues for Conn's over the last 12 months was $1.08 billion. The net income was $83 million, and the cash from operations was negative $148 million. Now, the operating margins for Conn's in 2013, 2012, was 7.1%, and 2013, it's tracking to be 8%. And actually that may be 2013 and then 2014. Conn's fiscal year ends in January, so that could be a little confusing sometimes. The trailing PE ratio for Conn's is 24.8. The forward PE ratio for Conn's is 14.4. So that's a pretty wide margin, implying that analysts expect earnings to increase quite a bit over the next year. The PEG ratio is at 0.9. That's below 1. Usually that's somewhat of a bargain, or at least a bargain signal. The price to sales is at 1.9, also not too high. The price to book is at 3.6, and the enterprise value to EBITDA is at 17.2. That does seem a bit higher than usual. Taking a look at their recent closing price, yesterday's closing price was $56.77. The 52-week low for the company was $29.18, and the 52-week high was at $80.34. And as we'll see in a minute, they were recently at that high. So right now the closing price is I guess it's closer to the high than the low. That's for sure. But as we'll see in a minute, they experienced a recent pullback. The 20-day moving average for Conn's is $65.76. The 50-day moving average is $69.25, and the 200-day moving average at $59.15. So, overall, with the exception of the pullback, that's the kind of relationship you want to see on an appreciating stock. The average daily trading volume for Conn's is 1.1 million shares per day. The beta for the stock stands at 1.1. That implies historically the stock has tended to move with the direction of the broader market. The dividend yield is at 0%, and the average dividend payout ratio is at 0%. Conn's does not pay dividends right now. Onto the price chart for Conn's. Back around early February of last year, the stock was around $29, and then through early August, it increased somewhat steadily to around $70. From that $70 point, it declined in late September to about $50, and then the stock increased in mid-December to around $80. It went through a significant jump at the beginning of December to mid-December, that $80, because of a turnaround in sales. So Conn's had experienced a broad increase in sales. Let's see, we have here year-to-year sales for home appliances had increased 26%. Their furniture and mattress sales had increased 25% in 1 year, and the consumer electronic sales also increased 27% in 1 year. So that news, this was around their earnings announcement, and early December was a big surprise, and so the stock jumped up to around $80. There was just a lot of fervor and clamor and excitement about the surprising sales. Since then, however, in mid-December, the stock has recently experienced a very strong pullback to where it is right now, down to about $56. So the stock was high around $80 in mid to late December, and it's pulled back all the way to around $57 right now. So for the past year, the stock is still up, and the stock has gone through some nice increases and then some pullbacks. But overall, we think the story's pretty solid for Conn's, and we feel like it has some nice appreciation potential. Going on to the next slide, the financial statement quality for Conn's is good. There have been a lot of improvements over the last year. They've had problems in the past with delinquency rates on customers they were extending credit to purchase their products. They've since gotten that under control. Let's see. That was a major issue for them for a while. They've been opening some more stores, and they expected to open more stores over the next year. Their sales have been increasing since 2010. The debt is under control. The debt they have due in 5 years is $294 million against revenues of around $1 billion a year. That seems pretty manageable. And their cash flow per share has actually been increasing quite a bit over the last 3 to 4 years, and is expected to increase in 2014. And we think that's going to be a strong driver of the stock price. So overall, the financial statement is good, and the operating margin has continued to improve over the last 2-3 years, and is expected to increase a bit more through 2014. And the price pattern trend, as we see, overall it is up for the past year. Now, the overall market right now, you're watching the market, we're starting to experience some pullbacks, and that's something that we've been expecting. We've been somewhat bearish for the past 2 to 3 months, and we think it's a good thing. There's been a strong advance over the past year, and pullbacks are just a natural course of the way markets operate. So we're still a little bearish, and but we feel like it'll probably bottom out over the next month, and we'll see how things go in that department. But the recent closing price for Conn's was $56.77 last year. Considering all these positive factors and earnings outlooks, our 12-month price target for Conn's is $86.16. So that puts a 12-month appreciation potential for Conn's at 51.8% over the next year. So we feel that Conn's is definitely the best stock to buy right now in the services sector, and we think it's a stock you should take a closer look at. So that's all we have for this week. And on to our next slide is just a reminder to sign up for our Saturday morning update and newsletter. And you can find it by going to www.gmcstockpicks.com. There you can find out the latest stock recommendation that we have, along with a wealth of other just helpful market information we think you'd find interesting. Basically, we find these opportunities by running our proprietary algorithms that look at over 3,500 stocks every week, and we review, analyze, and rank them based on appreciation potential and opportunity. So we're new on the block. We continue to show everyone just how good we are. So please go there and sign up, and we'll catch you next week. Take care. Bye.